Hello, everyone. Welcome back to the Dividend Uncle, all the way from Japan, where I'm holidaying with my family. But dividends are never too far from my mind. Today, we're venturing a bit beyond the familiar REIT landscape to discuss CapitaLand Investment Limited, or ticker 9C, a heavyweight in the Singapore and Asian property scene. CapitaLand Investment recently unveiled its 3Q 2023 and 9M FY 2023 results, and there's a lot to unpack. Stick with me as we delve into why CapitaLand Investment has piqued my interest as a stellar dividend stock. And, of course, we'll explore whether CapitaLand Investment deserves a spot in your portfolio. CapitaLand Investment's diverse income streams. CapitaLand Investment operates through two main income-generating segments: fee income-related business, or FRB, and real estate investment business, or REIB. 1. Fee income-related business, or FRB. The FRB segment encompasses income derived from fee-based services, marking CapitaLand Investment's role as a real estate investment manager. This includes property and lodging management. CapitaLand Investment earns fees for managing and overseeing various properties and lodging facilities. This could range from commercial spaces to hotels and serviced residences. Private funds management. CapitaLand Investment generates income by managing private funds, likely involving real estate investment. Investors pay fees for the expertise CapitaLand Investment provides in fund management. The notable growth in the FRB segment of a 9% year-on-year increase in revenue, particularly in lodging and commercial management, indicates CapitaLand Investment's proficiency in these areas. This diversification within fee-based services contributes to a more stable income stream, even in volatile markets. 2. Real estate investment earnings, or REIB. The REIB segment involves earnings generated directly from real estate investments. This typically includes income from investment and trading, where CapitaLand Investment engages in buying and selling real estate assets for capital gains. This can involve strategic investments in properties expected to appreciate over time or tactical trading for short-term gains. This segment holds properties that can be a pipeline for its funds. The challenges in the REIB segment, leading to an 8% year-on-year decline in revenue, could be attributed to weaker markets, potentially in China, and foreign exchange losses. Real estate investment earnings are often more susceptible to market fluctuations and economic conditions. Stable dividends in volatile markets. CapitaLand Investment, a global real estate investment manager, boasts a diverse portfolio spanning various sectors and regions. Its revenue for year-to-date to September 2023 saw a 3% year-on-year dip, primarily due to challenges in the REIB segment, partially offset by strong performance in its FRB segment. Despite the hurdles, CapitaLand Investment's distributable income for the 9 months 2023 rose by 4% year-on-year. The declared dividend per share, or DPS, of 10 Singapore cents signifies an impressive 11% year-on-year bump. With a commitment to paying out at least 80% of distributable income as dividends, CapitaLand Investment is positioning itself as a reliable source of stable and growing dividend income. CapitaLand Investment's dividend yield stands at an attractive 4%, outshining the average yields in the Straits Times Index. The sustainable dividend payout ratio of 79% indicates a prudent financial strategy. Intriguingly, CapitaLand Investment is currently trading at 1.0x price to book, or PB, ratio, compared to 1.4x in 2022. This suggests a margin of safety and also the potential for capital appreciation. China's economic slowdown and cautious recommendation. Now, let's address the proverbial elephant in the room: the impact of China's economic slowdown. As China constitutes approximately 40% of CapitaLand Investment's total assets and revenue, its economic woes create substantial headwinds. While CapitaLand Investment has implemented strategic measures, the challenges persist. Therefore, I would think whether you choose to buy or hold CapitaLand Investment would depend on your risk appetite and investment horizon. CapitaLand Investment, although facing headwinds, remains a well-managed company, trading below its NAV, and offering a decent dividend yield. Yet, uncertainties in its largest market pose challenges. My strategy with CapitaLand Investment. I currently hold some CapitaLand Investment shares acquired at favorable prices during an earlier period, and I have a long-term positive outlook on the potential of CapitaLand Investment. These holdings, acquired at lower prices, reflect my commitment to the long-term growth story of CapitaLand Investment. Despite the challenges posed by China's economic slowdown, particularly in the short term, I am retaining these holdings. However, given the ongoing economic headwinds in China, my approach is one of careful observation. I intend to closely monitor CapitaLand Investment's performance and the management's proactive strategies in navigating the slowdown. This vigilant stance will inform my decision-making process regarding further investments in CapitaLand Investment. While my current holdings reflect a belief in the long-term potential of CapitaLand Investment, the short-term economic landscape, especially in China, will influence the timing of any additional investments. Conclusion: CapitaLand Investment is not a risk-free investment. It's imperative to conduct thorough due diligence, especially considering the uncertain and volatile market environment, regulatory changes, and competition. That's a wrap for our in-depth exploration of CapitaLand Investment. If you found this video insightful, show some love by hitting the like button and subscribing. As always, this is the Dividend Uncle, signing off. Happy investing.